All right, all right. We're going to be moving into our next symbol here. If you guys are new, my name's Ethan. Make sure to check out my website, ethanwrenn.com. From there, you can find links to all my various socials. We are currently live on YouTube and Twitch, so make sure to follow and subscribe if you'd like to be notified when we go live next. We are going to be moving into a kind of a different segment. We just finished doing some technical analysis for today. We're going to be moving into some videos that will go into our That Time We Shorted series. These are recaps of some past trades we've covered, and there's some really, really interesting ones that I'd like to show you guys. So, without further ado, what are we going to be talking about first? Natural gas. Natural gas. Pretty fucking boring, I know, right? As you can see, this video was filmed 5 months ago. It was actually from the first stream back after, I don't know, I was away for a period of time. I was busy living life, guys. If you come through here, where is it? This stream right here. Oh, shit. Anyways, you'll get the idea. It's filmed 5 months ago, August 19th, 2022. Let's see what I had to say about natural gas back when this was filmed. Okay. So right here in front of us, we have natural gas futures. It's actually kind of funny to look at, right? Let's just do some quick observations first. RSI, boom. See this? See this? Peaking out, touching the resistance. I think there's even a red line that I put in there. I don't know if we need to have that, but here's another example when it peaked out, sold off. Peaked out, sold off. Peaked out, sold off. Again, you see the RSI used in every chart that I do technical analysis on, so it shouldn't be a surprise or a new concept to anyone. When it's touching the ceiling, you want to sell. When it's touching the bottom, you want to buy. Very simple, straightforward. Here's another example. Touches resistance, sells off. In this case, it sold off over 80%. 80%. Here's another example. RSI. 1, 2, 3, sold off. 1, 2, 3. When this one sold off, it was another 80% to the downside. Here's another example. RSI peaking out. Sold off. This one was 63% to the downside. Now, what else can we say about natural gas? Let's look at over here, the forward curve. This is a broken forward curve, right? So right now, currently, this asset, $9.28. The forward curve is literally just showing a actual straight line down to $4.50. Actually straight, like, there is no logical reason for this thing to be where it's at. I don't know if you guys go to the pump. When I go to the pump, I'm paying like $3.40 for gas. Explain to me. Not only that, wait, we're going to expand on this concept. Oil output has been increasing, so supply is up, objectively, okay? We have more than we know what to do with. This country is one of the leading nations for exporting natural gas and oil. We have more than we know what to do with. Next, market watch. U.S. gas prices have fallen for 48 straight days. When was this posted? This was posted on the 3rd of this month. So, like, what, 2 weeks ago? It's the 19th now, so give or take 2 weeks ago. 2 weeks ago, they're reporting natural gas prices have fallen for 49 straight days. So 2 weeks ago, we were looking at a monthly chart. So it's somewhere in this candle, we'll just say. Explain to me how the price at the pump is going down, literally, yet the asset is trading at $9. You go to the pump, it's literally $3.40. I live in Ohio. Maybe if you live in New York, it's $4, right? Okay. Explain why the electronically traded products, ETPs, are double that. The intrinsic value of natural gas is literally $3.40 for me. We'll round to 4 for you weirdo California people. Okay. Right here. We'll round to 4 for you. It is currently trading over 100% above that. The electronically traded products, right? Even the forward curve is kind of showing you this process, right? With the fact that it's literally just straight down to $4.50. So in the real world, we're seeing prices of $3.40, but on the Ponzified electronically traded products, we're seeing higher than that. This is a differential, right? We have our intrinsic, which is our $3.40, and then we have our extrinsic, which is all hype, all just buy, sell, whatever, $9. It is actually hollow. There is nothing to keep these prices where they are at, and this is a bubble. This is a textbook definition of a bubble. This asset right here, aka natural gas futures. It's actually a bubble. Actually, the textbook definition. if you wanted to invest in natural gas, you would be better off literally going to your local gas station and filling up canisters than you would be buying these electronically traded products. You get it? Why would you be paying for an electronically traded product that's clearly inflated over 2 times your local gas station when you could literally get the exact same product at your local gas station? That's literally how it works. I don't know what brokers you guys use, some broke boy, Robinhood, whatever the fuck, but with my broker, when I buy these electronically traded products that are representative of a commodity, I can take delivery of them. If I own an ETP for gold, I can call them and be like, yo, I'll pay the delivery fee, $25, whatever your broker's delivery fee is, and they will mail you a gold bar, bro. Actually. And the same goes for oil, and the same goes for energy. So when you are buying these electronically traded products, you can take delivery of your gas. But explain to me, why are you buying it at $9 per gallon when you could get it for $3? That's a bubble. Like, this is not representative of the actual underlying. That's my actual problem here. Secondly, let's look at this resistance here. Natural gas is this electronically traded product. The futures for natural gas have not been at this price point since 2008. What a coincidence. It has once been rejected from this price point in 2000. Also, what a coincidence. What happened in the year 2000? Do you guys remember? And then we have this downtrending price channel, which we actually identified right here, right now. You guys saw, we looked at the weeklies, connected body to body, comes right through. What a coincidence. And then we further validated this line by showing you how it applies over here, showing you how the same line applies here, the same line applies here, the same line applies here. It's a valid line. It has actual weight to it. It's not just scribble. It's there for a reason. 3 times in natural gas futures history has it ever even past its current price point. We have 1, 2, 3, and it has not stayed above this price point for longer. The longest time that it has ever been above its current price point is 180 days, tops. Let me copy and paste that. Oops. 1. We've already been at this price point for half that. Can't really see if I put it there. I've already been at that price point for half that. You have less than 3 months to get out of this. Anyways, I'll even put it over here in front of this chart just to further show the case. You see? That means other than 180 times 2, 360, right? We're ignoring 360 days out of this over 30-year price history. It has been under this price point. Regarding 300, there's 360 days, right? That has ever been above this price point. Out of 30 years. That's like 3% of the time that it's ever maintained above this price point. 3% of the time. Where do you really think this is going? Be honest. And natural gas isn't unknown for having these massive 80% sell-offs. It's actually quite common in a company like this, or a symbol like this. Look, minus 65, minus 60, minus 80, minus 63, minus 81, minus 60, minus 65. It's very common. So we recognize that you'd literally be better off filling up canisters at your local gas station than buying these electronically traded products and then selling those. The forward curve, absolutely abysmal. It's clearly just ponzified. There's actually no reason. It is a bubble, 100%. Just want to touch on that. Again, over the past 30 years, it has only been at this price point or higher 3% of those 30 years. I mean, it's quite clear that it is going to sell off. It's just a matter of when. We did identify these resistances, 1, 2. Like literally, look how perfect these are. Look how perfect these are. And after everything we've discussed today, after everything we've really covered today, what reason do you have not to think that this is just a valid technical analysis? After everything we talked about, from currencies to major market indexes to social, entire sectors of the economy that we just obliterated from a singular VOD. We went through the sectors index and a bunch of its underlyings, and every single one of them hit. We covered like 10 symbols in a singular VOD, and every single one of them hit. What reason is there to doubt me, guys? But it's okay. Make your own decisions. I want you guys to be an informed trader, right? I want you guys to understand everything has its peaks and valleys. This is quite clearly a peak. And these things happen. It's very natural. We're in the market of buying low and selling high, and this is not buying low, objectively. that's my case. We've been streaming for 4 hours and 15 minutes today. I can't even tell you guys the last time I did a 4 hour and 15-minute stream today. I really just felt like I had so much to talk about, and I quite clearly did. Yeah, my name's Ethan. You can check me out at ethanwrenn.com. From there, you can find links to all my various socials. We are currently live on YouTube, Twitch, Twitter, Facebook. Did you guys enjoy the video? I'll quickly write something here. So why is it that we wanted to cover this natural gas trade that we made, again, 5 months ago? Not even that long ago. That's only 5 months, guys. It's only 5 months. Well, let's look at the current state of natural gas. Let's get the current state of this. You guys ready? Well, let me pull up the exact same chart we were looking at in that video. What even happened, guys? What even happened? I have not updated this chart. Since we last looked at it. Guys. I have not updated this chart. Everything's still there from the lines, from the projection we made. Let me get these side by side for you. As you can see, the downward sloping diagonal lines directly in place. The horizontal lines directly in place. The projection, boom, is the exact same. We projected as much as a 82% move to the downside. Look at the current, 82% move to the downside. It hit to a T, guys, over the past 5 months. It hit to the T. Like, it could not have been more spot on. Let's even get more zoomed in here. From the, what price point was the video? It was at $9.27, which if we come over here, $9.27 at the very top, guys. The second the video went live, this shit started to tank, and it tanked fast. That's 82% move to the downside in 5 months. That's less than half a year. If you annualize that, that's damn near 200%. That's a pace of like 200% per year. People are like, oh, just buy an index fund. You'll make 9% a year. Gee, thanks. Oh, buy bonds. You know, awesome. You'll get 2% return per year. Stop, guys. This trade could not have been more successful. Like my little purple text here. Hilarious. It was also there in the video. Again, how were we able to identify this? Just using a lot of the same indicators that we always do with every technical analysis we do here on this channel. For example, let's start with the RSI. When you're looking to do a short as compared to going long on a trade, the type of indicators you're looking for are very similar, but you're playing the game inverse. You're kind of flipping the game upside down. If you want, you could just like invert this chart, right? And you're playing the same game with the same indicators. But if you're looking for overvalued assets, I would start by looking at the RSI, right? So as you can see, the RSI was high in the sky. It was slamming its head above that 70. This is typically an indicator that it's overbought or overvalued. It's typically not when you want to be investing into something. You want to be investing when something's low so that you could then sell it high, right? So when something's low, the RSI would be down, touching that 30 area. Again, guys, this is the monthly chart that we are looking at. Always keep in mind the time frames. You can, if you come up next to the symbol here, next to it, you can see this M. That means every single candle here represents 1 month of time. If it's a W, it represents 1 week. But these are monthly candles. So we're looking at the RSI. It was at the 70 Clearly overvalued. It was just a matter of when it was going to pull back off of this. A time prior when the RSI was as high as it is now would be right here in 2019. We also shorted here as well. This was back in the DGAS era when there was UGAS and DGAS, which was a 3x leveraged ETF that traded on natural gas. That was a great era, guys. We were making too much money. They had to delist it. We were making too much money hand over fist with natural gas. As you can see, just on the day, natural gas moved 10%, which is kind of insane. Kind of insane. You know, it's been quite volatile recently, to say the least, considering we made an 80% short in 5 months, and it's moved 10% on the day. So if you had access to a 3x leverage ETF, you would have made 30% on the day. Kind of makes sense. Kind of makes sense. But back in 2019, we were doing that. We were doing that. It was prior to when I was making like investing related videos. It's unfortunate, right? Because then you can actually look back at it like we did now and see it in real time. But go to my Twitter, talking all about it, Discord, things like that. That was great. But as you can see, RSI went up. It touched that 70, proceeded to pull back and lose as much value as 65%. A time before that when the RSI was as high as it was right here in 2014. RSI came up, touched that 70, sold off as much as 65%. The time before that, 2008. Look at this crazy 2008. RSI went up, touched the ceiling, pulled back as much as 80.5%. As you can see, natural gas tends to have these periods of inflation and deflation all the time. Another thing that I had pointed out in the video you guys just watched was the forward curve. I had never seen a forward curve that looked like this in my life, guys. There's no other asset, no other company. A forward curve has never looked like this in history. This is crazy. It was literally a cliff. Have you ever seen that? Like, if you go to the S&P, like, you get this nice upward sloping forward curve pointing into that 5K territory, right? But this was insane. So that was another huge red flag. We also pointed out that natural gas has never maintained a price point as high as that for more than like 1 to 3% of its entire price history. And right here we have as much as 30 years of price history being represented by this one chart. There's probably even more prior, but that's what this is representing. Keep in mind, I'm also looking at the futures. Not that, like, because that's how I would track it personally, and that's how I did do it. But let's look at the ETFs, right? I don't trade futures, guys. You know, I was in the ETF. I was in the United States Natural Gas Fund. How did that go for him? Oh, ew, oh, that don't look good. Oh, why does it have so much decay, guys? Why does it just always go down? It's almost like this would be the worst thing to be holding over a long period of time ever. It's almost like betting to the downside on the UNG, United States Natural Gas Fund, is almost a guaranteed hit if you just give enough time to go by. Oh, wow. Look at that. Over the past 5 months, this symbol has also lost as much as 80%. So you could have shorted the futures or the ETFs that represent the underlying and made a similar gain. Back in the DGAS era. Yep. Look at all this. Look at all this. Look, there's purple text on this chart too from 2019. What was I saying then? That's funny. Let's go back to the futures. Give me 1 second. Honestly, this could not have been more perfect of a trade. If I'm looking at the weekly now, so each candle represents a weekly. This is a very direct route, guys. It was basically straight down, one bounce, used the weekly 20 moving average as a resistance, arced around and then continued going straight down. Very easy to hold on to a position like this without getting seasick. And it was just excellent. Excellently executed. Currently at $2.50, which is kind of relative to what I'm paying at my local gas station. I don't know how much you guys are paying now, but what, it's like $2.90 at here in Ohio, like $2.90, maybe $3 if you're in California. I know, so much. But natural gas is not something that appreciates really over time. Again, the United States is one of the biggest exporters of energy across the entire world now. We have more than we know what to do with. We have so much underground that we will never run out of natural gas in our lifetime. The best way to play natural gas is, as you can see, there's kind of like this horizontal price channel here where it fluctuates. You know, it has this range. It doesn't appreciate. It's not an investment. It's not a store of value. It's not going to go to the moon. But if you simply play the range, there is money to be made here. Don't get me wrong. We've made a lot of money here. You know, if you see this support in roughly that $1.64 territory, and then maybe on the high end, 380, you know, I wouldn't, you know, it never really goes higher than like 360, 380. Like those are some extreme circumstances if that ever happens. As you can see, it was as low as $1.97 this past month. Not even like the past 3 weeks. It was as low as $1.90. $1.90, guys. $1.90. I'm waiting for it to be $1.90 at my local pump. You know, like it was, in 2020. It was this past week. It was less than a week ago. It did gain a lot on the day, today specifically, right? 3 days ago. 3 days ago, it touched $1.97. Ain't that interesting? But that is also kind of why we're making this video right now, guys, to inform you that we are closing the natural gas trades. So that is now done. Now, where would you expect it to go in the future? Well, I don't want you guys to go around talking about like, oh my God, I love your energy, like some crazy, you know, crystal praiser type person. You know, that's kind of cringe, but you know, I would probably let it consolidate a little bit more into that $1.70 territory, and then you could potentially start scaling in. It has gone as low as $1, as represented by this chart here. In 2020, for example, it went to $1.40. So I don't know if I'd want to scale at like, be scaling in at like 250, but it's not overvalued anymore. You're welcome. You're welcome. You know, maybe it'll hurt less when trying to fill up at the pump. Thank you, Yellow Vest movement. Very successful trade. And again, the importance when we make these That Time We Shorted videos, or like these our trade recap videos, is to show how we identified this value with foresight, right? Because it's easy to have hindsight and say, oh, well, it was clearly overvalued, you know? It was up. It was inevitable it was going to sell off. He's not smart. He didn't know what he was doing. It was obvious, but that's hindsight. You need to be able to recognize these things before they happen. That's the important part. You need to be able to identify and recognize these things before they happen so that you can actually take action and potentially profit on these fluctuations in value. So that's what's important. So we're trying to explain what we were looking at to identify the overvalued assets and or undervalued assets, what we did to scale in, whether we used raw shares, whether we used a leveraged ETF, whether we traded on margin, whether we used options, etc., and then show you how it went. And then we get to show you like how it actually went, because we're actually doing it, guys. We're actually doing it. So that's what I try to show with these trade recap videos. That being said, we are actually going to be jumping into another one directly after this. Let me get a moment to set that one up.